Hello everyone and welcome back to our little Bitcoin and cryptocurrency experiment now in our Witness channel. Today we will resume on our article or our presentation from yesterday about Donald Trump calling Bitcoin a scam and the question and have a look at the question if Bitcoin will be the next reserve currency. So first of all, the price of Bitcoin is around about the $32,000 mark today. Let's see. Chia has recovered and coins Bitcoin 35. So it has recovered from 32 yesterday. And we see a relative strength in the whole market for cryptocurrencies today. So for all of you that are invested, that is a good sign. But now let's have a look into what I think about Bitcoin being the next reserve currency. Uh, Definitely Bitcoin isn't a scam, we know that. And I don't think Bitcoin is a threat to the dollar as well. The real threat to the dollar lies somewhere else, in my opinion. In my opinion, this is the real threat to the dollar. As investors fled almost every fixed income asset from the safest government bond to the highest yielding security last week, one market stood out as heaven. Funds poured 671 million into exchange-traded funds tracking yuan bonds last week, taking inflows so far this year to 2.2 billion, data compiled by Bloomberg show. In contrast, they offloaded almost 600 million of emerging market notes last week. So notes are basically a synonym for bonds. China's bonds have largely escaped the turmoil in global debt markets, with yields on the benchmark holding firm on Thursday, while that on treasuries soared more than 20 basis points. So the overall yield has gone down. Chinese sovereign notes were the third best performers globally in February, according to data from indexes compiled by Bloomberg and Barclays. And the same we can find in an article from the 21st of May this year. Interest in mainland Chinese bonds has picked up, especially from foreign investors, institutional investors, said Jason Pang, portfolio manager of the JP Morgan China Bond Opportunities Fund. The foreign share of mainland China's bond market, the second largest in the world, reaches 3.44% in April, up from 3.2% in December. So if a threat comes to, or if it comes to discussing a threat, it is definitely not Bitcoin, which is the threat to the American dollar, but it is the Chinese renminbi, because the number of trades with China is increasing and China is picking up ever more of the global share of business. That means a natural effect is that ever more invoices will be written in yuan, and it will be ever more likely that Chinese suppliers will not accept payment in dollars but will just refer to payment in yuan. It is just a question of how much they produce for their own market. As long as they produce most of it to sell it into the dollar sphere, then they will, of course, accept dollars, but at a certain point, they will sell the overwhelming uh, uh, parts of their production to the domestic market, and then they will simply just ask for payments in renminbi, and then we will see a shift, I think. And with the bond market, I mean, it's still minuscule. We are talking about a development of 20 years or 30 years. It will not happen overnight. So the bond market will grow, and once it reaches, let's say, 20 to 30% of the world holdings in Chinese bonds, then the race for the future reserve currency is over, in my opinion. And is Bitcoin the scapegoat? Of course it is. The real fight is between the US dollar and the Chinese renminbi. Bitcoin is no contender for the reserve currency because it has some real impractical features. First of all, Bitcoin is a static thing, which is not like a national economy which reacts and has uh, uh, is an organic entity. So it evolves, national economy evolves, and it mirrors rises in in productivity or in falls in productivity. It mirrors real life events which are taking place, new technologies and whatever. Whereas Bitcoin is nothing but currency which is non-related to any real life events apart from its price. So the output of Bitcoin will not slow because of a pandemic or of whatever reason. The output of Bitcoin will not slow because something new has been invented. It is just something which is happening in the background without any relation to what is going on in the real world. And the other thing is Bitcoin will outperform inflation rates because of its scarcity, and we will see that Bitcoin is having the same problem as Berkshire Hathaway. Just to have a look, where is it? Here. So Berkshire Hathaway has a problem of a very high share price, which means that similar to Bitcoin, you have a price which is basically preventing people of from buying Berkshire Hathaway shares. So they decided to introduce a new class of shares, which is the so-called Class B share. And the main point in, or the main problem with the Class B shares is, and why they do not perform as good as the Class A shares, is that you have higher volatility in the market, and you have a lower voting right. So they, more than 20 years ago, they were content with their high valued single class of stock, but the market was demanding a lower priced one. And so they invented or they split a new class of shares off, which was basically the class B share, and it has lower a lower voting right than the class A share, so you have to pay a price to be poor, and the price is that you don't have the same voting rights as your more sound, financially sound investors who can buy class A shares. I don't know. It's up to you to think about what consequences this has on a more on a wider scale. But anyway, the price you have to pay also is that it's more volatile and that it usually underperforms the class A share. So the analogy to our to Bitcoin is we have Bitcoin trades in Satoshi, of course, which is a tiny fraction of the Bitcoin, and to make it more where is my Satoshi? Let's see. Nope. It's not that easy. Where is my Satoshi? Don't find it. Oh, did I delete it? Nope. Here it is. So the Satoshi is a millionth of a Bitcoin. I think it's 3, 6. Yep, it's a millionth of a Bitcoin, and it's the tiniest part of a Bitcoin which you can trade. And payments of less than 546 Satoshi are usually referred to as dust and are generally not relayed or mined. So basically they fall through the fence. What that means is if the price of a Bitcoin will rise to, let's say, $500,000 a piece, which is predicted by some, you will see a rise of trade in Satoshis, and that means you will have more and more transactions in the net which are simply not relayed or simply just not handled at all. And there is another problem with the dust or with the Satoshis, and that is that the transaction fees you have to pay. Bitcoin isn't about with irritating kings, yeah, we know that. And obviously one of them is that if you trade in parts of Bitcoins, it means that you are producing more dust. And the main problem of the dust is that the transaction fees, the fees you have to pay for your Bitcoin transaction, which are incorporated in the blockchain, might exceed the value of your actual transaction. So, giving the problem that the number of transactions might rise and the value of the single transaction measured in parts of Bitcoin, not in dollars, in parts of Bitcoin. So the value of the Bitcoin rises in dollars, but that doesn't affect the Bitcoin itself. It only affects its relationship to the real world. For the Bitcoin algorithm, it doesn't matter if one Bitcoin is $1 or if one Bitcoin is $10 million. But for the transactions, it will be a rise in number of transactions, and also a rise in the number of transactions in the realm of the dust. And that leads to the problem that, have a look here. These fees, while today representing a few $100s per block, could potentially rise to many thousands of dollars per block, especially as the number of transactions on the blockchain grows and the price of a Bitcoin rises. Ultimately, it will function like a closed economy where transaction fees are assessed much like taxes. That means at a certain point of the price rise in Bitcoin, it will be just financially nonsense to trade tiny fractions of a Bitcoin. And that will give rise to another phenomenon, but we know if you followed the Madoff history and Bernie's use of feeder funds, if the actual Bitcoin transactions become a closed economy, then we will see the rise of feeder funds, and that will mean that funds or money accumulation organizations which are not governed by the Bitcoin chain will collect the money to invest into Bitcoin, because only by this way, and that is exactly why Berkshire Hathaway did this split from Class A to Class B to prevent that from happening, and that will be the end of decentralization of the Bitcoin. So that is why Bitcoin can never be and will never be a reserve currency. It is just not designed to be exactly that. So if ever we will see a reserve currency made of digital money, it will be a basket, it will be a whole array of digital currencies, but it will definitely not be the Bitcoin. So thank you very much for watching. Have a very good day. Please like and subscribe, and see you again.